Look at that, right at 4 o'clock, and we're about ready to start, and we are crossing our fingers here in Lexington that the big thunderstorms rolling past don't hurt our connection. So we hope that doesn't happen. So anyway, hello, and welcome to our AAEP podcast, COVID-19, Business Continuity Planning for Equine Practitioners, presented by Dr. Marsha Heinke, DVM. I'm Karen Pouts, Director of Education at AAEP, and I'm joined on the back end of this webinar by Kevin Hinchman, our Director of IT, and Amity Wall, Communications and Technology Coordinator. Thanks for your help, Kevin and Amity. Okay, I know everyone has tons of questions, and we'll try to get to some at the end of Dr. Heinke's presentation. You can submit your questions during the webinar using the Q&A window. The chat window is just that, chat. So please put your questions to Dr. Heinke in the Q&A window. If you don't see or can't use the Q&A, that means we've exceeded our limit of participants, and we're sorry about that, but we're really happy you joined us. But we're going to do another webinar with Dr. Heinke. This one will be this coming Friday, April 10th, again at 4 p.m. Eastern. And mostly, this one will be a chance for her to answer your questions. We'll email you another invitation for the webinar, and I'll include an email address for you to submit questions. Then, even if you can't join the live webinar on Friday, you'll be able to hear her answers in the replay. This webinar will be recorded and will be available tomorrow, Thursday, April 9th, via our website's COVID-19 Resources for Veterinarians page. Head to aaep.org to find it. Let me introduce our speaker for today, Dr. Marsha Heinke. Dr. Heinke is a 1979 graduate of the Ohio State University College of Veterinary Medicine. She was a full-time mixed animal practitioner for 14 years with special interest in companion animals and horses. She is a certified public accountant, enrolled agent, and certified veterinary practice manager. Her firm's team works exclusively with veterinary professionals seeking to improve business systems and quality of care. The firm provides a wide breadth of management consulting services, business valuation, group facilitation, speaking and writing, back office assistance, tax and accounting services, and in addition to all that, she's now a very sought-after webinar subject matter expert. So I'm so pleased to welcome Dr. Heinke to the webinar. And Dr. Heinke, let me turn the screen over to you.
Thank you, Karen. And hopefully you have my presentation up now.
Looks good to me.
Give me a thumb. Okay,
Yep.
Great. Okay, here we go, guys. Boy, there is so much to talk about today, and there's just a tsunami of information that's coming at all of us. And this is my artwork for the month because it really says it all about what we're dealing with. It's overwhelming due to all the factors that we know. We're dealing with the onslaught of regulatory agency interpretation of very complex law that's been passed by Congress. We're now looking probably at another wave coming through here within short order, and we still don't have our arms around what's already there. And on top of that, it's the fact that we've got so many aspects of the pandemic itself that we don't really understand how the virus is going to affect our practice, how it will affect our vendors and our industry partners, what does it mean for our families and for our communities. And trying to put all this together as a practice owner, which is the perspective that I come from, but I recognize we have other people on this call that aren't owners but are perhaps associates in veterinary medicine. It really puts a lot of burden on us, regardless of what our position is as doctors of veterinary medicine, as leaderships in our organizations, and helping our teams understand what they need to do. And there's so many decisions that have to be made on the fly. Businesses across the United States and across the world have not had the time to properly risk assess and react to the impact of all the things that are happening, in particular in the United States, the actions of the government on our operations. So my goal, talking with you today, is to try to download as much practical information, really distilling to the things that I think are important for you to know, and at least acquaint you with some of the thoughts that I think are important in risk management, and then help you decide as to how you're going to be proactive in supporting your practice continuity. Why we feel so overwhelmed, there's a lot going on right now, is trying to interpret what all the information that's coming at us. And in particular, from the standpoint of what we're talking about today, is how do the regulations interrelate, and what does it mean in terms of how we're managing our most valuable resource, the people that we employ, and what that also means for their families that are impacted by these decisions. So some of the things that we're running into, and I think most of you have a sense for this right now, is how does unemployment interrelate with paid sick leave? What are the types of unemployment that are available? What are the subsidies and the credits that are there for keeping employees in place in our businesses? I realize that we have some international folks that may be sitting on this call, but we are going to talk a little bit about U.S. law right now and the interpretation of some of the federal laws that have come through, specifically the CARES Act and how that impacts veterinary practices and the decisions that the leaders have to be making. This may be the most confusing time in our nation's history and in our personal experience. And I think a lot of this comes down to this feeling of being overwhelmed is, who do we listen to? Do we listen to the mayors and the officials that are in our immediate communities? What about our state governors? Are we listening to our state representatives and the people who are in Congress? Do we listen to the president? Do we listen to the experts that surround these people? It's a little bit of like, who is on first? And the answer to who we listen to can be really different depending on the question that we're asking. It can be different also for each state or jurisdiction. And this is where some complexity comes in, is that we think that we know that we're going to the right place, but then we find out that the laws are unique in our own individual state and possibly even in our own local jurisdiction, which impact the conclusion that we make when we're trying to make a good decision for our veterinary practices. And there's no exact answer that can be applied to each practice as we go through this information. Clearly, it's a facts and circumstances type of situation we're in, and at any given time, it can change for a specific practice in a heartbeat. You can make decisions today, and tomorrow that decision and that plan that you made today is blown up. Ultimately, you need to know what the absolute authority for any mandate lies on this. In general, what I'm going to give you as instruction here is, as you're trying to make a decision as to where you get information, try to drill down to the immediate jurisdiction you have, which can always be more strict than the next level up, particularly when we talk about some of the essential versus non-essential businesses under this idea of sheltering in place or stay-at-home orders. So just as an example, when you're trying to figure out what you need to do in your community, I would look locally to find out what guidance is there. Where you're probably going to end up is in on the governor's website to actually read the exact executive order that has come through from the governor's office, so that you can understand and interpret what the meanings are to some of the information that's coming through. In many cases, some of the ways to comply are really clear, but can be really different depending on the state. So just an example, I'm going to throw this out there right now. You know, in the accounting profession, we all realize, and I think most taxpayers understand, that we're on an extended due date of July 15th for the federal returns. But keep in mind, your state could be completely different, and then you have different tax requirements within the state, such as sales tax, use tax, personal property tax for states that have that. All those things can impact as to how you're reporting. So by mere fact that we have some extensions on reporting and when taxes are due doesn't necessarily mean that that impacts everything across the board. And then we're dealing with so many different agencies. We're dealing with Medicare, Medicaid, banking authorities now as we try to push loans through, utility authorities, state oversight agencies, the EPA, the DOL, Health and Human Services, the FDA, the IRS, all have varying compliance requirements that organizations must abide by. So it's really incumbent that you understand the rules. And I would tell you, too, because there's so much complexity and confusion going on right now, you'll hear things like, well, you know, if you could just make a good faith effort, you're going to be okay. But all of us, at least those of us that are business owners on this call, understand that agencies are not necessarily forgiving. And so I would remind you that there is no room for saying, I did not know. You're called to keep up as much as you can. With all that said, we're going to have more answers as the days go on, even if we don't have them in the moment. So I know a lot of you have questions that are in mind today that you'd like me to deal with, and we can look at this again on Friday. There's going to be times where I'm going to say, I don't know, because I can tell you I have been working around the clock 7 days a week now since probably the middle of March, just trying to get my hands around what I need to know to help clients understand. So we all need to be working together to overcome these worrying times. And I think you as veterinary practitioners know that some of the areas that you're so helpful to each other as colleagues is just talking about what kind of services are essential, how do you keep your employees safe, what sort of things do you have to do as you're going out on veterinary calls. There's just a lot there where we can help each other. Stay mindful. While it feels overwhelming, know that this is temporary. And for those of you that are in management position and in leadership decision-making roles, really think about this strategically. We're going to talk a little bit about this through our time together today. But I want you to think more than just what's in your face right today, because there's a lot of decisions we're called to make on the fly. It feels sometimes very panicky, but really from the standpoint of what we need to be thinking about is probably more midterm and long-term as we go through the recovery from this pretty significant crisis. As I've been telling my team and on other calls, is I'd really like all of you to think for any decision you're making right now is kind of put yourself forward 1 year and then look back, you know, kind of be able to be in the position of saying, if I look back on this decision that I made today, am I going to be feeling pretty good that I made a pretty good decision, understanding what I had available at that time? So be thinking about your decisions and your conclusions, what you're telling your colleagues, your teammates in practice. Be thinking about, you know, where you're going to be at the long term. And, you know, one of the things I've come across is I think the Veterinary Hospital Managers Association is really a great organization. For those of you that have practice managers or certified practice managers in your equine practices, it's a great membership opportunity. But right now I've been so impressed looking at the forum that they have, the community forum for those people that are members, is where there's a lot of dialogue going on, the application of unemployment law, furlough time, laid off time, how to manage keeping employees safe, personal protective gear, all these sort of things are being chatted about right now. And one thing that came up in that forum is just having some bad actor employees in practice that are saying, well, I really don't want to come in and you need to pay me more if I'm going to be on the front lines type of attitude. And I think there's probably a gentle place there to remind others that are on your team that, you know, they want to be able also to look in the mirror and look back on the way they comported themselves in this particular panic-stricken period of time, that they were good colleagues and they really did support the team and help the community get through what is a pretty significant crisis. I am really convinced that as a profession we're going to come out well. I think, once again, veterinary medicine is going to be in a much better position than some of the other businesses that are in communities. As you look at your clients and what they do for a living is understanding that some of them are in pretty dire straits right now. Their businesses have been shut down because of the shelter-in-place rules. You've got all sorts of people that own horses, and some of them are going to have a pretty tough situation. And here we are, most of us are allowed to continue to be open and continue to do some limited amount of work to help our communities and keep our staff employed. We're in a much more powerful position than many of the other business owners that are in our communities. I think we're going to look different when we come out of this. One thing I know for sure is that we as practitioners and as veterinary staff are going to be much more comfortable with alternative options for telehealth and telemedicine, just as our clients are going to be. So it's going to be really interesting to see where we all come out of this. I want to talk a little bit about the economy, too, and what the corona impact will be. There's never been an economic shock like this. It's never been experienced before. We have so many shocks that are happening at the same time. Obviously, this all started in China. We had the supply chain shock. There's also now a global demand shock where we can't get what we need. We have a confidence shock, a lot of fear going on that's probably analogous to what we all felt September 11th, 2001, the fears that went through with a major terrorist attack, and certainly a confidence shock that happened several years later when we started to hit the Great Recession from the mortgage crisis situation, particularly we equine practitioners that face the fact that there's going to be a huge downsizing of the equine population at that particular time. I really do think the equine practitioners are going to come out a lot better this time, maybe even better than some of the small animal folks. Economic policy has been, the economic policy uncertainty, the trade war issues, that has created another shock. And, of course, now we've got the extra bonus hit by the oil war on top of the severe decline in the stock market. The economist I heard speak last week talked about this lockdown paradox, which means the more severe the containment measures are for the virus, the faster all of us as citizens will get past the infective stage and how this impacts us personally and our families, but so much sharper will be the economic hit. Quarter two here is going to be the largest decline in the economy, probably across the world, I would guess, with just a gradual rebound in how we come back. In the United States, there's 30 million jobs that are at immediate risk right now, and a lot of those jobs are represented in our client basis, so something to think about. And also to think about is 50% of the consumer spend that we have is discretionary or social. Lower income families are most exposed, and 53% of U.S. households have no emergency savings. A colleague of mine sent me this information from Packaged Facts and the U.S. Pet Market Outlook. I know this is not equine medicine. However, it's pertinent to relate to it. Released on April 1st, U.S. retail sales of pet products and services will decline by 17% in 2020 versus the 5% growth year over year that was seen 2019, 2018, and before. This particular white paper was predicting a 30% decline in 2020 veterinary services. Maybe equine practices will be a little bit less than that, and I would love to hear from some of you all in terms of where you think this is going to go. Of course, it's very specific to the practitioner. I know one of the questions we had was from an equine practitioner that's servicing a racetrack that's shut down right now, and so his practice is shut down. So there's a 100% decline right there, hopefully to come back soon. 20% recovery anticipated in this white paper in 2021, but that would only bring us back to 85% of our 2019 revenues. Now, this is probably pertinent to some of you that are thinking about your budgets and what you're going to be doing along that line. So it may be helpful when you're starting to do some cash liquidity planning is to thinking about some of these guidelines that we're getting from other areas. The main three buckets of topics that I wanted to talk about today are cash management, the law changes that are going to be impacting our budgets by providing a source of funding through various credits and relief and delays of when taxes have to be paid. And I also want to address some of the employee management issues that we have, which also kind of covers client concerns, because both of those to me are big issues for communication and how we communicate with the people that rely on us. And we already talked about this. I think the last bullet point there, client relations and communications through the pandemic. I really want everybody on this call to be the resource for the questions your clients have. So whatever you're doing to get information out on a regular basis through email, text messaging, whatever it is, I think being on top of how you can educate your clients as to how you're going to be able to serve them, what you're providing, when you're open, what are the emergency situations are really very, very important. Some of these slides are going to get pretty dense because I had so much information I want to go through. Obviously, we're going to record this, and I'm making the slide deck available to the AAP and its membership when we get done with our meeting today, so you'll have all this information. But I think, first and foremost, where I wanted to start was talking about employee management because the practice team is extraordinarily valuable. We all know how difficult it has been to get quality individuals on board in the last several years as the labor market has really tightened up. And, of course, now we're going to have a plethora of people that may be available for hiring. However, these are the people that we've trained, know what they're doing, and I think it's really important to think about how we keep the people that we've developed and have brought into our organizations, how we keep them tight to our practices through the evolution of what we're dealing with right now as we're trying to flatten the curve, and then as we get into the recovery stage of the pandemic. I do always like to quote my colleague Jen Braid here in the office, who's a CPA. She says, if a person has not been helping the team, they've been hurting it. And one of the things we want to look as we go into possibly reduced hours of operation and reduced work that's available to keep people busy is this maybe the time to look hard through scan through your organization as to the employees that really you've had on board and just been keeping around because you couldn't get anybody else. So, as you think about the triaging of what you do in terms of downsizing the organization and deciding, are you going to lay off, are you going to terminate, are you going to furlough, are you going to put people on part-time work, is also be looking for those people that you really do want to terminate at this particular period of time and do your ducks in a row to make that done in a way that can be done in a way that keeps the risk minimized for the practice itself. And this just reminds me to warn you all is that I think one of the things that we're going to see as we get into the recovery period is that, practices that have not really thought through how they are making decisions right now and not doing them in a logical, defensible way is going to open up the opportunity for litigation. Now, you remember, anybody can sue you at any particular time for any reason. And of course, one of the things that employers fear most of all is employee litigation that alleges discrimination or some other cause that would allow them to come after you. So, number one, make sure that you have a good plan of action. Number two, assure that you've got good advisors, pay for their time. If you need to call an HR attorney, please do it to make sure that you know what you're doing before you pull the trigger. And the last thing is that most of you, I'm sure, have employment practices liability insurance, EPLI, and don't let those policies lapse. Also, keep in mind that those policies often come with a 1-800 line that you can call for information and assistance if you need it. So feel free to go after them if you've been paying the premium. Everybody is going to be impacted by this personally and professionally. So I think the first thing as a practice leader that you want to think about is employees want to know how the changes affect them personally. It's really great to go through training and keep people educated about personal safety and sanitizing the premises and the trucks and how you manage yourself with protective gear when you're on farm calls. But, before you get into that, employees really need to know how the changes that are coming fast and furious are going to affect them personally. So to the best of your current insight, please be truthful, candid, be in front of this. Make sure your employees have very accurate information and keep them aligned with trusted resources. We already talked about, going to the horse's mouth on state executive orders, but this is some of the information you're going to share with your employees and also with your clients, and try to interpret the information you're coming through as best as possible as it applies to your practice and community. And one thing you may want to think on some of practices that have more depth is, and maybe if you've got people that are working from home right now, rather than, more and more of us are dealing with that. I've got two of my staff that are working full-time at home from home at this point, but you might want to think about this is one of the things people can do is communication task force. Where is the information being gathered in? Then how is that information being deployed in a way that you can communicate effectively with the employees as well as the clients? Develop timely communication with the employees using the Cuomo model. Governor Cuomo starts with daily facts. He then explains the safety focus, so you can explain what your practice is doing. You want to be very positive and solutions-based. Encourage ideas, questions, dialogue. Your team is going to have really good ideas, and be really consistent about the messages you're giving and the truthfulness that you're using. As leaders, we're really stressed to the max right now to do those things to keep our practices very healthy and manage the culture in a way that we're going to look back on this a year from now and feel pretty good about what our decisions were. As you look at your essential business workforce, here's the word essential again, please evaluate existing policies and protocols. You're hearing that flexibility is encouraged, but you also have to be a little bit careful with the gargantuan amount of law changes that are coming through to clarify your options and solutions before you implement them, because they could affect what you're doing. One example of this is, effective now, April 1st, for any size employer from 1 employee to 500 employees, we have these new expanded paid leave acts that are in place that came through under the Families First Coronavirus Response Act. And one is the Emergency Paid Sick Leave, and the other is the expansion of the Family Medical Leave Act that you'll want to keep in mind. And right now that's effective, and I know there's a lot of questions around this right now. Your favorite friend right now is the Department of Labor. I can't believe I'm saying that, but you really want to be checking that Department of Labor website at least once a week, if not every other day, and just looking at the frequently asked questions on the pandemic page. There's a link in this presentation further on, which will give you a lot of the answers about when this stuff kicks in and what is qualified leave time under these two acts, which generally has to fit within some narrow boundaries of what's COVID related as to when employees are eligible for these paid leaves. When we're thinking about, we'll come back to those two. When we're thinking about the essential business too, remember the AVMA has put out an employee letter for commuting. If you are an essential business in a shelter-in-place state, you really want to have something that your employees have on board. I know it's not required in all states, but it's not a bad thing, as there tends to be some tightening down of policing of businesses and people that are out and about as to whether they have a lawful reason to be out and about. Some of the other things you want to do for your workforce is make sure your sanitation protocols and routine processes are brought up to speed with what's going on in your community. And you want to think about what the client management protocols are to minimize viral exposure. I'm sure you guys have lots of different ideas on what this might be, and that could be a whole webinar in itself, but some of the basics are coordinating with barn owners before you even go on a call, making sure that you have the proper protective gear for everybody involved, including now in Ohio here, everybody wants to have a mask on, eliminating the extra people that are standing around watching what you're doing, getting rid of them because they are just another possible nidus of infection and the possibility to spread the disease. Thinking about how you can use telemedicine more effectively, and there's a lot going on there. How do you do more shipping to your clients for supplies and things that they might need? And then how are you going to manage employee safety, client safety as you're admitting animals in hospital situations? These are some things you want to be thinking about doing in terms of business continuity and management. Specifying protocols for workers to timely communicate if they have known viral contact or not feeling well. You may need to triage that, have somebody that's a point person, figure out how you're going to get that done. You may evaluate the need to obtain emergency contact information that may be stale. And considering how fast people can get very, very ill with this particular disease, you may want to have that done now. Look at exploration of options for PPE. That's been kind of difficult, but you guys can handle that. Continue to evaluate, adjust work hours to meet activity and client need. This is a financial budgetary consideration, and evaluating how you're going to manage the practice in a fiscally appropriate manner as we're going through this period of time. We're going to talk a little bit about the budgeting procedure and revenue sources and expenses towards the end of this, which is going to get really fast. Evaluate and budget pay for frontline workers. Right now, some of the businesses are doing bonuses, overtime, and hazard pay. So I think you're aware of some of that, but that's not unusual right now with what we have going on. Make sure your practice is prepared to comply with regulatory state and federal government requirements regarding unemployment. Although we hear, even written into the CARES Act, that the DOL has been given the directive from April 1st to April 30th, the first 30 days of the paid leave acts, to be helpful and not be punitive. We know that this is going to be a deal as we go through. I have found the DOL to be a very unfriendly group of people. And so as business owners, we want to make sure that we're really complying with all the rules that are there. There are great webinars that are out there that talk about the differences between furloughing and layoff and termination. So I would say, you can start with the Society for Human Resource Management, SHRM. If you're not a member, it's an inexpensive membership. It might be one place that you would want to spend some money just to kind of keep up with the information. But certainly the Department of Labor website is extremely helpful. And there are other organizations that are out there that can help too. Those of you that are on the call that are members of veterinary study groups, I would point you to the FlexR webinar that was done on April 3rd by Jim Suchansky, and that was quite good. So get on the website, check that out. There are some nuances to integrate state disability benefits. Here's where the state differences come in and how that integrates with unemployment insurance, paid sick leave, and this is where you may need some HR specialty. You're going to have to know what leave runs concurrently. For example, the two paid leave acts, the sick pay leave and the expanded family medical leave, those can run concurrently, meaning if I've got somebody that's infected, tested positive, or falls one of the other full pay metrics of the Emergency Sick Pay Leave Act, the first 10 days of leave can be paid, and then they can go right into paid leave under the Family Medical Leave Act, with those first 2 weeks that are unpaid under the Family Medical Leave Act expansion, then going into the remaining 10 weeks of paid time at 2/3 normal pay with some limitations and caps. And generally, just keep in mind that employees are not eligible for unemployment benefits if they're on medical leave. So it's this idea of you can't really be double dipping when it comes to some of the things that are going on, that are available to help us going. So you want to think about 2 issues of work hour reduction. Some of you are doing that. If you have exempt workers, those would be salaried workers that are exempt from time and a half pay versus non-exempt hourly workers. You want to keep that in mind. A lot of us have veterinarians that are on pro-sal formulas, and so the question is, does something need to change there if their salary is such that they are being relatively overpaid for the level of work they're doing right now? You may have to do some renegotiation. I hate to say that. This is where the integration of some of the expanded unemployment offerings out there may be helpful to you. We probably can't get into all the nuances of that, but just keep that in mind, that there are some strategies that can be taken. If you do negotiate salary for exempt workers, keep in mind that you have to be at least at the federal minimum, and some states are higher, which mean you'd have to meet the state minimum. So I just put the numbers there so that you knew what they were. You also have to be careful about exempt employee reclassification. Some people have suggested taking salaried workers to hourly status, but you got to be real careful about changing classification back and forth, because then you might be bitten by that later litigation that alleges that I should have been paid overtime back in February, January, and 2019 and wasn't paid that. So you want to think about all of that. If you are going, I'm not a big advocate of reducing the pay rate per hour, but if you do go that direction, you are allowed to do that. You have to, if you do reduce the rate of pay per hour, you must meet the minimum applicable federal and the state rate if it's higher. It can't be retroactive, and you have to give those employees notice should you do that. When you think about your essential business workforce, assess the time period it will take for the practice to return to adequate staffing. So this is part of your budgeting procedure. You got to estimate what your downtime is going to be. Is it going to be 8 weeks? Is it going to be 12 weeks? Is it going to be something less or more? Probably more. Watch what's happening elsewhere in the hot spots, how quickly they're recovering. I think we're watching, at this point, Italy and Spain at this point, trying to get an assessment of when people come back, and certainly China. Establish return to work requirements such as employee notification, depending on whether somebody's been laid off, furloughed, or whatever it is. You want to have that nailed down, that as you can see that there's light at the end of the tunnel, to get people back into the workforce as fast as you can. You want to look at your benefit programs, evaluate and address what are you continuing. Those of you that went through the Great Recession with the mortgage crisis, you'll remember that, we had to pull the belt in pretty tight. So you'll want to think about what you're continuing, what are you curtailing, and one of the things is, maybe suspending retirement funding for a period of time to make sure you have adequate cash flow for the other things that you need. You're going to want to make sure your employees have a clear understanding of what their benefits are this period of time. If they're laid off, they may be eligible for COBRA. If you're a smaller practice, they may be eligible for mini COBRA under state law. So there's a lot of benefit options there that you'll have to be thinking about as people are laid off or their time is reduced, and then what happens when people are ready to return to work, and how will those benefits be reinstated. And then you got to be able to communicate what employees need to know on all of this. And I've been emailing my employees probably once a week to give them detailed information about what their expectations can be. Make sure you have a good understanding of what the danger of noncompliance with all this stuff is. I know you don't like to hear about this, but there's major damage that can be done to a business based on some of these issues, and it's very, very important to communicate your expectations of the employees for your practice to stay in compliance. So document, particularly now as we're getting into some really challenging payroll issues. We want to document the reasons for leaves that employees are taking. I've heard some people say that you don't want to ask for doctors' excuses because the doctors and the human health care system is overwhelmed. But the reality is that, as you're paying wages that are subject to tax credits at the same time, you're going to want to be able to defend those positions and make sure that you weren't doing something fraudulent in terms of alleging that time that you paid out was eligible for tax credits. So you've really got to have the documentation in the folder. So please do that. There's your link there for the DOL pandemic website, which is going to help you a bit in terms of deciding what to do. Enforcement agencies, are they friend and foe? We already talked about that, so I'm just going to blow past that slide. 3 truths of cash forecasting: know your clients, know your suppliers, know your liquidity options. You want to get a handle on practice daily cash needs right now. Some of you have probably already done this, but this is where you need to go. Quickly evaluate, determine how the new federal laws can help you. Take the necessary actions that you can to obtain these funds if you need them. You want to take a critical view of your operations right now. This is the belt-tightening thing. Review your existing cash flow processes and understand how potential disruptions can affect the liquidity, such as collecting from clients. Evaluate cash requirements on a frequent and routine basis, and make sure anybody that's managing your cash flow in your veterinary practice has oversight for that, has access to owners and directors, and can make quick decisions about what to do, particularly as payroll comes due every 2 weeks. I want you to know your practice's daily break-even revenue. Jen Braid in my office did a daily break-even revenue calculator based on bare bones analysis. I'm not going to go through this, but she's made a little Zoom tutorial that goes along with that, so anybody who wants it is free to contact me, or better yet, I can give it to Karen and the AEP, and they can mount that. We're sharing that so people can use that to kind of go through the calculation and figure out what their fixed costs are that they have to cover. And really what you want to know is what your worst case scenario is, and determine what is the level of capital infusion you might need for days of closure or reduced activity, so you can project needed amounts of loans. and determine the degree of loans you needed, if any. The one thing you need to know is practice liquidity is paramount to survival in any significant downturn like this. By now, most of you have been in contact or know that you should be with your practice bankers and lenders. This has been really frustrating to get to the front of the line. The banks are really being stinky about who they allow to the front of the line as practices are trying to make application for the SBA loans availed through the CARES Act. Before you go there, though, you might even want to think about what current loans you have and what the loan covenants are and what are the debt service requirements that are identified within those loan covenants. You don't want to get out of compliance with your covenants that would cause a loan to be pulled quickly from you. So you want to stay current and work with the lenders as best you can. The lenders are really under the gun. The bankers are just frantically trying to figure out what to do with SBA interpretation and don't really even know at this point in some situations. It's pretty phenomenal to see how they're scrambling, trying to interpret what's required and cover the bases to keep their own risk mitigated as they interpret what the government has foisted upon them. Clarify your ability to get short-term loans. Also, look at what the other options are that you have, such as owner contribution. Some of the owners that are in good financial situations personally know, those of you that have been in ownership positions know very well, at least from January and February, it's often a time that we forego salary so that everything else will work. But you also want to identify, can owners actually contribute cash, make capital infusions to the practice that will help. Right now, the fiscal policy stimulus that's been put in with this $2 trillion CARES Act is 9% of the GDP. So just recognize as you're thinking about your longer range plans for your practice and budgets personally and at the business level, is that today's solutions are tomorrow's problem. Obviously, this is really going to increase the deficit. So longer-term considerations as we claw out of this recovery are going to be just expect increased income taxes. A lot of people have asked me about, well, geez, is this going to hurt my unemployment, shoot my employees to unemployment? This is going to be just like the aftermath of the Great Recession and the bailout of the mortgage industry and the banks. Is that, we had so much unemployment at that time, all of us as employers got hit, whether we had employment ourselves or not, with increase to our rates. And for most of the states, the unemployment claims are going into the general fund, and they're going to be spread out across employers as we get out of this thing. Benefit costs, think about health insurance premiums. My broker, I want to cry when I heard this. He said it depends on how many COVID claims are made, but he said, Marsha, expect your premiums to go up 20 to 30% next year. Finding liquidity with tax crumbs. Use the tax code. Changes to your benefit, even if they're transient. There's a lot of stuff that's in the CARES Act. It's over 880 pages. A lot here to know, but I just pulled out some things that I think are of interest. One is student loan debt. A practice manager gave me the suggestion a few days ago, which I thought was really good, is the student loan option for those practices that have debt at their veterinary level. Both the employer and employee can win on this. This only goes through the end of the year, where the employer can deduct the cost of up to $5,250 of student loan debt payment, and maybe you can swap that out with taxable compensations to the benefit of both parties. You want to have a separate written plan if you do that. Basically, you can pay the loan the lender directly, or you can pay the employee that amount of money. Both are okay, and obviously not subject to taxes to either party. So nice benefit for both. Internships. Somebody had asked the other day also about rent. For those of you that have internships, if that you provide compensation, tax-free compensation in terms of rent, where rent does not appear on the W-2. Is that rent perhaps compensation that might integrate with your loan application computations for the Paycheck Protection Program loans? That might be something to think about if you've got a significant value to the rent that is part of the compensation arrangement with your interns. I don't know the answer on that, but that's something to maybe talk about with your CPAs and see if there's a planning opportunity there in terms of trying to maximize the amount that your practice might be eligible for the Paycheck Protection Program loans. There are some other factors in the CARES Act to look for. These aren't for anybody, and what's really funky about this is you can't do everything. If you choose one course of action, it will preclude you from another. The retention credits for employers that are partially or fully shut down is not available if you take a PPP loan, but it is an option if you don't take one or if you can't get in on this first program, although they're talking about another wave of funding of maybe $250 billion, I think is what I heard yesterday. So this pertains to any quarter of 2020 if you were shut down or reduced or your gross income was less than 50% of the same quarter of the prior year. You're eligible until your receipts exceed 80% of the prior year, same quarter comparison. It's for 100 or less. For 100 and less full-time employees, all wages count. If you're over 100, then only the wages of the employees not performing services are taken into calculation. $10,000 per employee cap, which results in a $5K payroll tax credit, which is refundable if you go over for 50% of the qualified wages. So that might be an option for some of you that don't do the PPP. There's also short-term compensation arrangements. I'm not going to go through the details of this. Just be aware that it is there, and you have the details in the slide. Basically, you register with the state for unemployment benefits, and it allows the employee to make up some of the reduced time through applying for unemployment. The employer pays the state 1/2 of the amount that the unemployment compensation is paid by the state itself. The CARES Act, which went into effect March 27th and for which the banks theoretically opened up application time on Friday, provides stimulus payments to individuals. So there's some cash flow that's going to help people, individuals that fall within a certain range of AGI. A lot of veterinarians are going to be outside of that range because they make too much money, but it will be helpful to your rank and file employees. It also expanded unemployment coverage, which is being directed down to the state level. What you need to know there is each state is different as to how they're using these federal funds that are coming in. You must go to the state unemployment site for your state to identify what your people are eligible for. So if you're that racetrack veterinarian that has no work right now, is laid off, yes, as a sole proprietor, you may be and probably are eligible to apply for unemployment coverage right now. That's one of the changes that's been availed through the CARES Act, that suddenly sole proprietors can apply and independent contractors and gig workers can apply for unemployment monies. And, of course, then there's additional federal kits put in of $600 per week. That's very beneficial. Student loan changes, we talked about retirement account rule changes, where you can actually take loans from retirement accounts. And this may be helpful as a source of funds for some of you that are running business or even at an individual level. And the full text of the law, I've really referred people to go back if you can. The link is here. The first link there is the actual law. So I always say go to the horse's mouth, get the real information, but there you go. If you want to read any particular part of this 880 pages, you can go in there and get specific information. Of course, the agencies are going to interpret it differently, and that's where we've had a problem with the SBA really understanding how this impacts. Some businesses are going to have access to the $350 billion in loans out of the $2 trillion package. This is the amount that goes to small businesses of 500 employees or less, and a portion of it may be forgivable. So this is where people are really interested. The problem is that these funds are going to run dry quickly from everything that we know at this point. Wells Fargo Bank today emailed me and said basically they had run through their money in like 6 hours of what they were allocated. So from what I know at this point, each bank that does SBA lending has been allocated a certain amount of this 350. Hopefully you've got a good relationship with a bank that's got a heavier portion of what the loan availability is. And you may be unfortunate in having a relationship with a bank that doesn't have a good portion. My bank hasn't even opened up funding yet, and I don't know how much they have. That's Capital One. 50% refundable payroll tax credit on the worker wages. And this was another factor, or that was not as part of the the Payroll Protection Act, but is just another aspect of the CARES Act. The delay on the employer side Social Security, where you can defer payment of taxes. If you take a PPP loan, you can't do this, but other people could do this. I'm not a real big fan of this one, so I don't know how much you want to look into it. Your accountant probably will bring it up, where you can look at the Social Security portion of what you would be paying in every payroll, matching your employees, and you can defer what would be due in 2020 for paying 50% of it in 2021 and the balance in 2022. I'm not sure that it provides enough benefit to make it worthwhile, but it's one way of getting more cash flow now if you need it. There's no one right answer for every practice. You've really got to calibrate choices to look at the facts and circumstances of what your practice is going through. So these are the two loans that are coming through the CARE Act, the PPP loans and the economic injury disaster loans. Both are intended to assist businesses in maintaining payroll and operating costs. That's their intent. Their intent is to be used by businesses that have been hurt badly by the coronavirus pandemic and the correlating shutdown. Business can apply for both of these loans. There's been a lot of rumors out there that you can't. Everything I've heard, including some more information today, says that you can apply for both. The loan proceeds are supposed to be used for different purposes. Now, how you coordinate that, I don't know. I'm using it for payroll over the next 2 months. You know, it's going to go pretty fast because the PPP loans basically cover payroll for 8 weeks, but then I've got a lot of other costs that need to be covered in my business. The major premise here on either of these loans is the business must show economic need for the loan. So when you're doing your budgeting, as I was saying, is doing that break-even analysis and budgeting and forecasting what you need to keep open, how much more you need in terms of cash to maintain liquidity, that's going to help you solidify an argument and to paper your file to show that you qualified for a loan. And, you know, the way it's worded is pretty much is that you felt that there was enough current economic uncertainty to make this loan request necessary to support your ongoing operations. This is the verbiage right from the certification page on the payroll, the Paychex Protection Program. You will note that I highlighted at the bottom there that you are also certifying. I understand that knowingly making a false statement to obtain a guaranteed loan from the SBA is punishable under the law and can cause imprisonment of not more than 5 years and fines of up to $250,000. And then there's this other one of 2.5 years and fines of $5,000, and then another one of 30 years and a fine of more than $1 million. So I don't know what all those UCFCs are, but just be aware, you're filing these applications under penalty of perjury. Really consider it. Make sure you've got a good argument laid out. I think most veterinary practices are applying for these. I do realize that there's a moral argument there. I've had many practitioners that say, you know, I feel like I'm in pretty good shape, that I can ride this through, that I don't need this so-called free money. But I think everybody is also thinking, yeah, but what if I do? We really don't know what's going to happen. So I'm putting that out there and just saying that as you go through the process that you can consider what the risks are. The PPP loans are offered through banks that are approved, and not credentialed, I guess, approved by the SBA. And the SBA and Congress has really encouraged all banks to get on board with doing this. But many banks, after seeing the chaos of last week, have said, thanks, but no thanks, we aren't doing these. You can get up to a $10 million loan with 500 or less employees. I've seen some pretty big applications going through of $300,000, $400,000. The application process is through June 30th. Funds will run out sooner, I'm pretty sure on that. The loan amount is based on the specific calculation of employee compensation, and that has been really confusing about how to go through those calculations. There has been more guidance that was issued by the SBA, I think 2 days ago, to help clarify how that calculation is made, but ultimately it comes down to the bank that you're dealing with and how they want you to provide the information to them to provide then to the government when they send all the paperwork into the SBA to get funding. And it's just a craziness. There's the non-taxable forgiveness of the loan principal, and this is why it's so huge, is that if you have that loan forgiven, you're not taxed on it. So that's going to be determined from operational results. And the purpose of this loan was to try to get people back into the workforce right away. And ideally, what you'd be thinking about is that you want to time the origination of this loan at the point that things have started to loosen up and you can hire all your people back. But, really, I don't think there's any way to time this stuff at this point, because the fact is, if the money's going to run out, people are going to jump on the bandwagon right now. I don't think there's a way to strategically plan when you best originate the loan so that the measurement works out the best for you. What you do want to do, assuming that there is another wave, even if you can't get on this one, is get your paperwork in order. You're going to want to have tax returns, financial statements in good order, the solid reason for economic need or anticipated need, proof, lots and lots of proof of employee wages and compensation payments that were made in 2019 and the first quarter of 2020. You're going to want to run the calculations to estimate the amounts of proceeds, and you're going to have to provide those calculations to the bank. Many of the banks are providing their own calculators, and then they change them on a whim. ADP was doing the calculation for its clients. It was totally wrong, and now we've got a bunch of clients that are just trying to figure out what to do because they've made the application using a much lower amount than they should have because ADP calculated incorrectly, and now the banks are saying, well, we can't reapply again. And you should be able to reapply again with a higher amount, but it's really, really frustrating. And I know that one of the questions that Karen got before we started here today was, what do I do if I got less money than I was supposed to get? Can I apply again? And there's specific guidance that says, no, you can't apply again for another PPP loan. Now, what they will do when the next offering comes out, I don't know. I would, plead the case with the bank and really put the pressure on. The banks are being paid extraordinarily well for this. For loans that are under $200,000, I think it is, they get 5% of the proceeds. There are no loan fees assessed to you, but those banks are going to belly up to some pretty good amounts that are coming out of the $2 trillion that they're going to be getting paid for making these loans. So they're getting a substantial amount. It's a lower percentage as you go up on the amount that's loaned. The loan proceeds have to be used for certain defined expenses. At this point that we know that as you're looking at that post-origination date, 8-week period where the measurement takes place, that the payroll is supposed to constitute 75% of the fund use. What we are recommending is that when if you find out that you're eligible for the funds, the SBA has accepted your application through your SBA-approved bank, is that what you want to do is take those funds and ask that bank to set up a new checking account for you. Put the funds in there, isolate them, and then use those for these bulleted points, primarily in the area of payroll, which would include wages and group health benefits. Provides a very specific tracing of the uses of the funds so that you can really prove that you use the funds for what were intended. The other areas are utilities, mortgage debt service, and the interest portion of any debt obligations that you incurred before the covered period, which is defined as February 15th through June 30th. And then interest expense can be paid as well on the EIDL loans. Right now, although law set up to 10-year amortization, the SBA narrowed this down to a 2-year maturation at a rate of 1% with a 6-month deferral of the payments, and that 1% interest accrues during that period of time. I think you can elect to go out as much as 12 months on this before the payments kick in for the 2-year amortization, and the interest would accrue, but it's a measly 1%, so that's not too painful to get through, I guess. I'm going to quickly go through the EIDL, and then we're at 4:59, so I'm going to turn the reins back over to Karen. And Karen had told me yesterday that we could do some brief Q&A after. I didn't get through all the slides that I wanted to, but for any of you that can tune in on Friday, we can probably finish up with the balance of the slides and then go into a Q&A session to discuss. But I had some more cash liquidity things that I really wanted to get to today that obviously I didn't talk fast enough, so we're not getting to. The economic injury disaster loans, the EIDL loans or EIDL loans, waive, and the PPP does too, which makes them very attractive too. Waives personal guarantees on loans below $200,000. They waive the requirement to be in business a full year. They waive the requirement to show inability to obtain credit elsewhere without undue hardship. They also don't require a security interest in practice assets. allow the loans based on credit scores or an alternative appropriate method, whatever that's going to be. I don't know anybody that's gotten one of these yet, and I'm well wired in the CPA community on this emergency grant of up to $10,000 that you do not have to pay back. Theoretically, if you apply for an EIDL directly at the SBA website, these are not made through banks, they're made through the SBA directly. When you go on there and you make these things, you're supposed to, within 3 days after you give them your checking account information and routing numbers, get $10,000 drop, or some sum of money under that amount, drop into your checking account. And I don't know of any report of anybody that's gotten one. So there's a lot of questions as to what's going on with this at this point. And then if you do roll the EIDL loan into the PPP loan, which you can do, any such advance of the $10K will reduce the amount of PPP loan forgiveness. So that's how that works. Karen, I am going to quit at this time, and I'm going to stop sharing my my desktop. Can I turn over the reins to you?
You can certainly turn the reins over to me, but my brain is broken at this point. That was an awful lot of good information. We did have 2 questions come in while you were speaking, and I believe you just answered the first question, which is when will we hear about the $10,000 grant from the government? And I believe that's the EIDL grant that you were just talking about.
Yeah, we don't know. I have no information. We're feverishly looking for that, and as I say, all the CPAs across the country, I don't think any of them have seen a single client yet that has received one.
And then our other question is, will most equine practices be exempt for the 10 weeks of FML paid leave because they have less than 50 employees and just need to give the 2 weeks paid sick leave?
No, it's got to be extraordinary circumstances. I mean, there's been some stuff that's out there, but the fact of the matter is you need to have the Department of Labor poster up now. You should have had it up since April 1. There is a lot of danger not being in compliance with that. There are supposed to be some defined carve-outs for people that would, that it would basically put the practice under if you had to comply with the family medical leave expansion. But the reality is that this is a net zero game on those paid leaves. Is basically for every dollar you pay out in leave, it's a refundable credit that comes back to you. Meaning that if you've got one employee that's out on medical leave out of 10 employees, that pay period, and it's per pay period, that pay period, you obviously have employment taxes that have to go over to the Treasury, but the dollars that you paid out in family medical leave or sick leave will be offset immediately against the amounts that were due to Treasury. Now, if you get 5 employees out, it's certainly feasible that you would have more dollars put out in sick pay than you had taxes available, so that you would actually be owed money back. And there's supposed to be a very quick refund process for actually getting those dollars back from the IRS, and there's going to be a form that's available that you can apply to get that money back. I am very hopeful that if you have a payroll service, the payroll service is going to help you with this. It is really important right now to have a reputable, good payroll service that can help you through all of this because of the complexity of tracking what is qualified leave and then making sure that you're able then to get the credits back against that leave in a very timely fashion. Because being able to float this for a full quarter, that's a non-starter, and that's what a lot of people were worried about. But now we can see that the IRS has brought that down to it's each and every payroll. Those credits are immediately available to offset what you would have had to pay in taxes for those employees. So it makes it very easy to go. And just from a good employee relationship standpoint, I can't imagine why an employer would want to opt out of this at this point. Again, wanting to be a year from now, look back on it and say, I made really good decisions and took care of my employees, and they feel pretty good about how they were treated by our organization.
Phew. All right. Thanks so much, Dr. Heinke. I know you probably could have gone on for another couple of hours.
Oh, there's so much to talk about and there's so many questions.
And it
But
changes.
thank you all for being here.
Yeah. Everyone, we will be posting the recording of this webinar along with the documents that Dr. Heinke is going to give to us. We'll put that at the AAEP website. Just go to aaep.org and follow the links to the COVID-19 resources for veterinarians. Now, also, watch your email. We're going to send you an invitation for Friday's webinar. And you, in that invitation, we'll have an email address that you can submit questions ahead of time. And Dr. Heinke will spend a little bit of time finishing up this presentation and then also spend some time answering those questions. And even if you can't be there at 4 o'clock on Friday, Eastern time, to attend the webinar live, we will again record it, so your question might be answered and you can watch it in the recording. So with that, we have run over a little bit, and I think I will say thank you to everyone, and we'll see you again on Friday. Thanks so much, Dr. Heinke.
Thank you.